Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's take a look at the 4-hour Bitstamp naked. I don't really see much going on. You can see this flag that I was talking about 2 days ago now. Did break up, so that's good. Bullish continuation was bullish. Now we're sort of building another mini time frame head and shoulders. I'm not going to look at it on lower time frame because my time frames are broken on this video series, but the candles look enough like a head and shoulders forming here. Just if I zoomed in, I'm sure it's there. Whether or not the volume's there, I don't know. Looks like it is. You can clearly see descending volume profile here. So, if this breaks back down to this level, fine, whatever. I'm out of my long right now, so I didn't actually hold it through the edge to edge. Sometimes it'll, when it builds these ledges like this, sometimes it will go to the second or third. Sometimes it doesn't. At this point, I'm fine with just waiting until the Kumo breakout happens again. This could just go sideways up and then take off. But really what you're looking for, again, I say this all the time, but Kumo breakout, green cloud instead of red. So you see the twist, you'll see price above cloud. Lagging span above price above cloud. So those are the heavy go long signals. Something like this, where it just goes sideways and then it's just all of a sudden out of the cloud and not moving. And you're like, well, should I go long here? What should I do? And yeah, you should always go long here because it's just a better on balance minus variance. It's always going to be a better long than a better short, even better than sitting out just based off that. Really have nothing to say about oscillators other than Stoke went from, over here and crossed up to here. I don't know how to read that, but, you can correlate. If it's down here, buy. If it's down here, sell. If we had the fibs, the harmonics, and the horizontal levels, we can see it's back into this zone, which is either support or resistance, but never both. And it's kind of following through with that. You can see it like all these wicks here. It's kind of weird. Again, on lower time frame, you'd see this as a neckline here. 1, 2, 3, 4, 5, 6, 7 wicks there. So there's clearly support here on lower time frames, a strong one. And should it break that support, it's going to go lower. And it's in the zone, the 50 to 618 zone of a harmonic target, the first target anyway. The second target would be the diagonal here, whenever that would be. So, it's the trade happened as expected so far, and I'm still waiting on the inverted head and shoulders here, shoulder, head, shoulder, something. The volume profile still descending, even though, there's a head and shoulders here, there's a head and shoulders here. Sometimes when you're ranging, there's just no impetus to move one way or the other. Head and shoulder inception just happens over and over. And again, back to Heikin-Ashi, you're waiting on 2 of the same colored candle with higher closes and opens. So, like I said in the last video, you're either waiting for the chart pattern or waiting for just the candles themselves. So, the chart pattern completed about here on the triangle, the bullish flag continuation. If you weren't already long based on the edge to edge, the Heikin-Ashi backs you up here with edge to edge because on the second candle, which is definitely in the cloud, that says go long. Okay, great. So you're long from here. You hold it, you hold it, you hold it, and your target is always the other end of the cloud. But once you see these candles with long wicks or these doji candles, just small, no momentum candle, that's when you place the stop. So your stop would have been here, and you would have been stopped out anyway here or here, should you still be long. So that's my take on the 4-hour at the moment. Let's move to Ethereum. 4-hour Heikin-Ashi. Again, there's a larger chart pattern here, so Heikin-Ashi is less valuable because it's not trending per se as much as it is consolidating. That's backed up by the descending volume profile here. If we look at oscillators, not really much to say. Back to candles, again, the only thing I'm really seeing is either an ascending triangle or a rising wedge. Ascending triangle being bullish continuation, rising wedge being bearish reversal. If we turn on all our drawings here, And I'm in log, by the way, you can't see it down there, but I'm in log, and I'm still looking for this 200, which keeps rising. So, you know, they're going to meet eventually. If we look at the 50-200, the 50 is continually supporting it. The distance here, the gap, is decreasing, I believe, just based on my eye measurement here. But what you'd be looking for is either a cross recross or a touch of the 200, or just you know, a thin gap between. So all this says is basically it's sufficiently sideways based on the period of EMAs you're looking at. When they spread apart like this, it just says price is moving faster in the recent periods than the periods before that, using the longer EMA. So overall, the rising wedge still looks real to me. You know, it's certainly started to break down. If we move this, we can make it a bigger. You know, this is the problem with triangles. You can just redraw them over and over again. But that's certainly a viable option, isn't that rising wedge? So it just gets bigger. Triangleception. And then cloud doesn't give you much help as far as an entry or an exit currently. I do expect this TK cross to happen within the next day or two. So within the next 6 to 12 candles. Should price not move anywhere, which is seemingly unlikely at this point, just based on the sideways. If we pop on B-bands here real quick, just ranging, not much to say there. So if you were in a long from anywhere below here, or, you know, even in here, and the TK cross happens, you definitely want to close just based on cloud signals. And again, you're looking for the edge to edge. This is a pretty thick cloud, so it's a nice trade. And it shows you, again, the support being between 35, 30, somewhere in there. The 200 is right there as well, 618. So a lot of support for this zone should it drop. And it may just go on for a few days, but it's really hard to say on almost no volume at this point. And if we move to Dash, you can see it's drooped down nicely into previous consolidating-ish areas. So market memory principle, horizontals, previous support, or previous resistance becoming support. And it's starting to form a descending triangle or bear flag, which is a bearish continuation sign. So don't expect this to break up. The next zone down would be 0463, should it decide. And the reason I say that again is if we're looking at horizontal zones, just like Bitcoin, you know, this whole zone, there's nothing here. So there's no support per se. So it could easily just drop right down. And if we look back farther, I think this is like all-time high areas, so that gives it even more credence to having the ability to just drop down to this zone pretty easily at this point, 045. If we look at cloud, it's pretty far oversold based on the TK disequilibrium. And you can see I was mentioning this the other day as well. You know, you get this edge-to-edge trade, it'll pull back, and then it has the momentum to break the cloud. It'll break the cloud fast enough so that the Kijun doesn't have time to catch up with the price. And then you'll see usually this will actually pull up a little bit to the Kijun before it makes another descend down. So it could look something like this. This would actually break up and hit the Kijun and then go down to here. That's option one. The second option is going right through the Kumo twist here. Anytime you see this with price near that area, it says that price may be expected to shoot through that area because this is a minimal support resistance zone. And that sounds like voodoo magic, and it kind of is, but until you see it over and over again, you're kind of like, that really happened. Wow, that's kind of amazing. I still don't understand why, but that's the way the cloud draws it. So again, it's oversold. If we look at oscillators, let's see, Stoke crossed on the top. Ugh. So I guess this is saying that it's the up momentum is over. Should this break this threshold? And it has plenty of room for down. RSI disagrees with that. It's pretty low at the moment. There's no bull div on this, meaning there's a lower low in price and a lower low in RSI. So it can certainly get the momentum to keep going in the bearish direction. It's certainly not like completely insanely oversold just based on the oscillators, and Stoke tells me that it has plenty of room for down. It's weird that this volume is just descending the whole time. So again, some sort of consolidating pattern that I could look at on the daily, but I'm not going to. This harmonic, this zone that we discussed a few days ago now at this point, and the day before that, I think even, the zone hit pretty perfectly. So if we look at that another way, so if we fib this expected area to the previous top, you get this fib picture, and your stop is usually the 272 level, 1.272. You can see how wide this is. So depending on how you want to play this, again, this is like nuance of fibs and stops and harmonics. But just in this instance, you can see a stop here would have been fine, should you have decided to go long at this level based on the pattern before it completed. You're looking for this 887 level, remember? So you get the 3 points, and then you just place this somewhere till you get 887, and that's where your bids would be. Currently you'd be about break even. So although candles appear that this wants to keep continuing down, there's no volume certainly. Cloud says it's a bit oversold. RSI says it's got room for down. Stoke says it's definitely got room for down. The horizontals are 0.540456, something like that. You can see how coming to this zone, again, 0.5 to 0.618, is always a zone of the first target for any harmonic completion of a pattern. It's certainly viable within cloud resistance and even the Kijun, which should pop down here. It's really tough. This is a tough call, and you know, if you're long right now, I don't think you should be. If you're short, your stop could be at the Tenkin line or the 382, something like that, depending on where you were short from. This is probably not the best play on the 4-hour at the moment, but I think some safe bids would be down here again at this support zone. But we'll see. So that's all I have for today. Like, dislike, comment, subscribe, hit me up on Twitter, Telegram, and happy trading.